The car market has been on fire, outperforming stocks, housing, and gold with a staggering 22% increase since 2021, but it's beginning to come crashing down. Car prices have now began nosediving at an unprecedented pace, marking the largest decline in over a decade. In just 12 months, average EV prices have plummeted by a whopping 20%, while Americans are overdue with their car payments at the highest rate in nearly 30 years. But more challenges are looming in 2024. Let's discuss what's actually happening, why it will be a huge issue in the coming year, and what you can do to get ahead if you're planning on buying or selling a car, because there's a lot going on that most people aren't talking about. Have you seen how car prices shot up in the last few years? It's wild. 82% of consumers are paying above sticker price for a new car. What's behind this market bubble? Well, there are three big reasons, and each of them are coming to an end in 2024. First off, limited production. The past 3 years have seen some of the worst supply chain disruptions in the past century, with the manufacturing sector being worst affected, especially for electric vehicle manufacturing. These EVs heavily rely on semiconductor chips that control everything in the car, from motors to navigation and even seat heating. Car manufacturers like Tesla were forced into limited production due to the global semiconductor chip shortage, but experts predict supply chain should be restored to normal capacity in the beginning of 2024. Number 2 is low interest rates. At the start of 2022, car loan rates hit rock bottom. Lenders even dangled crazy 12-year loan terms, luring people into buying new cars.
Shut up and take my money!
Which led to record-high monthly car payments in 2023 and record-high outstanding auto loan debt. But guess what? It's all changing. The current interest rates are now at levels not seen since the 2008 financial crash. Thirdly, we have car manufacturer greed. This comes down to simple supply and demand. Limited car supply due to supply chain problems, plus sky-high demand from low interest rates. That's the perfect recipe for soaring car prices, giving car manufacturers higher margins for each car sold. Shockingly, BMW and Daimler pledged to keep prices high when the chip crisis ends, even admitting to enjoying their pricing power. Do you think this is unethical? Or can manufacturers do what they please? Leave a comment. So what does this mean for the future? And why is the problem much bigger than people think? Let's talk about car prices. Used EVs are facing 33% price drop, but more worryingly, car gurus, who track millions of car prices, reported a 1.25% drop in used car prices in the last 30 days alone. What's causing this? Well, here's where Tesla steals the show. Unlike other legacy car makers aiming to keep prices high, Tesla actually cut prices in the US after car deliveries fall. This move put pressure on rival manufacturers to cut prices or risk losing their market share. Big thumbs up to Elon Musk for this game changer. Used EV car sales are overtaking most new models, causing further price drops as the market share of new vehicles will decrease. Take a look at this table showing year-over-year decline in car price by body style. Crossovers are down 5%, hatchbacks 9%, and vans down almost 12%. Don't miss this pit stop. Subscribe to Wisdom Wave for me. You might be wondering, how much further can car prices drop? Well, if we zoom out and look at the bigger picture, car prices are still higher than they were before the pandemic, so yes, there's potential for them to drop a whole lot more. So what does this mean for you? Late car payments have hit the highest peak since 1990s. In fact, Google Trends reveals that the search term, "give car back," is at all-time high, indicating more and more people are struggling financially. If you're finding it tough to keep up with payments and selling the car isn't an option because you owe more on it than it's worth, consider reaching out to the bank and try renegotiate the payments. It never hurts to ask. In the long run, it could even save the bank from taking an even bigger loss by having to repossess it and sell it again. If you're in the market to buy a car, the good news is car prices are dropping each month. But the bad news is they're still more expensive than they were pre-pandemic. But now is the best time to negotiate price. The market is absolutely changing in your favor, so try use that to your advantage. If there's one message you take away from this video, it should be that cars are not an investment. The fact their prices have been rising over the past few years is an anomaly, and you shouldn't expect this to happen into the future. In general, cars are a depreciating liability, so keep that in mind. Always live within your means, and do not sign on a new loan for a car that you can't afford. If you want to know what price car you can afford, check out this video next. Thanks for watching.